Rectification of errors. This is our topic. And we have to discuss capital and revenue concept in this topic. Do you know why? Because if you do remember that there was an error of principle among the first type of errors which do not cause any difference in the trial balance. You remember? Yes, error of principle. What was that error of principle? The error of principle means the error in which we took wrong decision while recognizing our accounting head. So when we take wrong decision while recognizing our accounting head, when we are not correct in terms of capital or revenue expenditure or capital or revenue receipts. So in this module, we will see that what is capital and what is revenue expenditure and what is capital and what is revenue receipt. So by the way, if we will recognize this capital expenditure correctly and revenue expenditure correctly, in the same way capital and revenue receipts correctly, then this error of principle will not arise. Got it? So we will do a little practice to identify this capital and revenue expenditure and receipts. So first of all, we must know that capital expenditures are recognized as asset and revenue expenditures are recognized as expense. Whereas this capital receipt is recognized as liability or owner's equity. Okay? And this revenue receipt is recognized as income. So if we are clear on this concept, then we will practice to identify capital revenue expenditure or capital and revenue receipts. So just see that over here, we are purchasing a car. When we are purchasing a car, this is a capital expenditure. Okay? Well, whereas repair of car is a revenue expenditure. We have already discussed that capital expenditure is asset and revenue expenditure is expense. Okay? So purchase of car is purchasing an asset. So it's a capital expenditure. All right? Whereas if we are doing repair of a car, it is an expense. So it is revenue in nature. All right? Then comes purchase of computer. Yes, purchase of computer is an asset. So it's a capital expenditure. And when we will be installing this software in the computer, so this installation is also a capital expenditure, because without installing software in the computer, we cannot obtain economic benefit from the computers. So installation of software is also a capital expenditure. Installation of software in the computer. Okay. So purchase of USB for data transfer. This is an expense. This is a stationary item. Its useful life is not long term. All right. Or in other words, you can also say it is immaterial item. So should be taken to expense. It's a revenue expenditure. Then receipt of loan from bank. We took a loan from bank. It's a capital receipt. See here, capital receipt and revenue receipt. Okay. Well, so receipt of loan from bank would be capital receipt, and receipt of service fee. You have served your client and receiving a fee. So this is your income. So this income is revenue receipt. We have already seen that capital receipt would be liability or owner's equity. Okay. And revenue receipt would be incomes. All right. Well, next comes construction of storeroom. So construction of storeroom is an asset. We are constructing a building. So it will be taken in the capital expenditure. Okay. And rent of storeroom, if we are paying rent for a storeroom that we will be paying annually or monthly, so it is a revenue expenditure. Then wages for machine operator, the wages that we'll be paying, it's revenue in nature. So this is in fact our revenue expenditure. All right. So the important tips to remember in this module, in which we learned capital and revenue expenditure as well as capital and revenue receipts. These are that capital nature belongs to balance sheet. Capital expenditure is asset, belongs to balance sheet, and capital receipt is liability or the owner's equity, belongs to balance sheet. Okay, whereas revenue nature belongs to income statement. Okay, so revenue nature is expense if it is revenue expenditure, or revenue receipt is income if it is revenue receipt. So both of these two belong to the income statement. Okay, thank you very much.